Today we're going to talk about, are you in the trap or the trade? Stay tuned, traders. We'll be right back. G'day traders, Stacey Burke from Stacey Burke Trading. Tons of emails and questions. Today we're going to talk a bit more in depth about, are you in the trap or the trade? We're going to talk about the 12 candles and 3-hour blocks, how you can use that to identify the movement in the market where potentially there's been a peak formation or a high or a low put in place. If you're in a trade, if a certain amount of time has expired and you haven't seen that trade progress, how to recognize that you may be in a measured move or in the trap. Also, how we can look at 50 pip movements around numbers when these 3-hour blocks have painted to know if we're looking at a reversal, a continuation, or going back into a range-bound market. So we talked the other day about the first 12 candles in the New York Asia rollover and how we will often see either a stop hunt, so the market may go back into the trend that's, for example, the US session may have given a trade and into the close they've been up 25 to 50 pips. In the rollover, that market may come down right away. Stop hunt traders who are at break even maybe even take out their position and pull back with some pins and close above 50. That market, when that rolls over, could also put in a peak formation, which is when they will possibly go right through that low point of the New York session or perhaps the day and put in a new peak formation low, possibly with some kind of reversal pattern down here where the market has come back. And then also, we also may see that rollover just go into a consolidation within an existing move where it just closes and goes sideways within a range from the US market. But what that can help us identify potentially heading into Asia is whether or not that market, if it's reversed, is giving us evidence of buying off of 50. So we might see the market trade sideways, give a couple candles, and then within that Asia window all of a sudden close above 50 and continue for some sort of measured move or target stop hunting a previous peak from the day before. Each time you're in a trade, we talked about the 3-hour window around the Asia close, Europe open, 2 a.m. to 5 a.m. New York time. But if you start looking at each of these 3-hour blocks, you'll understand the same principles apply throughout the day. We may get a new high or low put in place. They may consolidate within the range. When Asia opens, they will either possibly extend the range out for a new high or a new low, or they will stop hunt against a move that's happened in the rollover with movement throughout there. But again, usually in that first 3-hour window of Asia, they will either put in a new high or a new low, or both, into the market. That potentially, in normal trading situations, often will give us our high and our low for the rest of that session. Now, in the last couple weeks, we've had lots of volatility in the market, so that's obviously been a bit spread out. There's more movement, more range. We're getting 50, 100 pip brackets for the Asian session, but usually the bulk of that movement will occur in the first 3 hours. If they were to extend that out, that second block of 3 hours will do that. They might come up a certain distance, pull back, and then in that second block of 3 hours extend it out as we head into the Asia close and the Europe open. Europe, therefore, then will come on board and often possibly paint a reversal to stop hunt back into the range. Then London can come on board and either again extend that move down into the previous Asian low or a low point from the previous day, or they can come back up and stop hunt traders who have shorted the Europe Open. But again, our focus for trading is at the high and the low. Usually, we will see that occur at round numbers. So, if we count our candles and we see these blocks of 3 hours evolving, if we were to take a trade, we know that, we talked in this in the other video, the hourly phenomena. Towards the end of each hour, you want to be looking at how your trade is behaving. If you're not in a trade, how the market is behaving around numbers. Often, if there has been a move prior to you coming to the screen, they are, if for example, if the market has already been moving as Europe is opening or London's opening, and you feel like you're chasing the trade, often that market will exhaust itself, usually on top of or below numbers, and it will consolidate. When a market moves 50 pips, it will consolidate in most cases, unless of course it's a stop hunt and it's going 100. But in general conditions, when the consolidation happens, you want to be looking at that consolidation and also in timing wise thinking to yourself, are we towards the end of this 2 a.m. to 5 a.m. bracket, or this 8 p.m., this is New York Eastern Standard Time, 8 p.m. to 11 p.m. bracket? Because again, you may be at the high or the low. If you're back inside of the range, that may be where the market's consolidating to retest one of the extremes. So each time this 3-hour cycle evolves, so again, just thinking in simple terms, if we paint a high and a low in Asia and then it consolidates, we head into the end of the Asian close, Europe either extends that range or stop hunts that range. London does the same. Once they've maybe put in a new high or a new point, new low point, they've moved it 50 or 100 pips, it will go into consolidation. We've talked briefly about the 7 o'clock stop hunt. So that's that next block of 3 hours before the U.S. session opens. Between 8 and 11 a.m. New York Eastern Standard Time, we will often see the range extended out even further, so the high keeps getting higher or the low keeps getting lower, or they will come back inside and stop hunt profitable traders 50 to 75 pips, maybe 100 pips back into the range of an existing trend. We've seen that happen every single day this week. Now then we head into New York, and again, New York will do the same thing. They will either break out and reverse and come back into the range, or they will extend that move out and go into consolidation into the close in many cases, or they will pull back and already be trading in the range and just go into consolidation and close. The markets do three things, and they usually do them in each session. In these 3-hour windows, when our equity markets open, usually we'll have a false break reversal, a breakout and a continuation, or a breakout, reverse, and range-bound market. Those are the only three things that happen. So if you can think in simple terms, we talked about working from the high or the low of the day, the high or low of the round numbers, if we have high points from the previous day in place and the week. We talk about using the equity opening times, but again, the reason why these 12 candle blocks and 3-hour blocks are important is because you can go back and work your way through the chart heading into the open to develop a stronger thesis about where you might be positioning yourself for a trade and in which direction. We let the market tell us what it's going to do, and we look to piggyback on that, on the smart money. So then, again, if there's been 50 pips of movement and the market goes sideways, what time is it? How long has it been in consolidation? Is it a continuation or is it a reversal? We want to look at, are we at double zeros or 50? We're always trading in a 100 pip box. You might be trading between 0 and 50. You might be trading on top of 50 down to 0. You might be trading on top of 50 for a measured move. When the market breaks out of a 100 pip box, it's either going down to the 50 or the whole lower part of that 100 pip box, or they're going to come back off of that 50 back into this box. And again, once a market breaks out of a box, that potentially now is a target for a measured move, or a peak formation extreme above or below the 100 pip box that you're trading in. And this is where we come back and we look at Monday, Tuesday, Wednesday, Thursday, Friday, day 1, day 2, day 3. Are we working the low of the week, or are we working back up towards the high of the week? Meaning, are they working the high of the week to sell it off, or are they working the low of the week to buy it up, or are we in a range-bound market for a continuation? Simple things, but again, simplicity, very simple. High of the day, equity opening times, round numbers, but using this information to help us simplify things in terms of understanding that, again, if we're in a trade and it's not going anywhere and it's been 2 hours, 3 hours, you might want to reassess if the market's giving you some contradictory information about either closing your trade out before you get stopped out, or if you are getting setup that's painting in the opposite direction for a move in the other direction. So 12 candles, trap or
Good
trade?
day, traders. Stacey Burke from Stacey Burke Trading. Just continuing our discussion on the trap or trade, and also looking at the 3-hour blocks and the 12 candles at a time, just to give you a bit of insight into when the markets open in London, at the highs and the lows, at the equity opening times, round numbers, if we are indeed in a possibly looking at how to position ourselves in line with what may be the trend and not be getting caught in the trap. And if we are in a trade that doesn't seem to be going anywhere, using time to possibly end that trade, understanding that the 12 candle window that we may be caught in may be actually positioning to go against us in the other direction. So just looking, I've got the iSessions indicator on here for the purposes of this video, which is in the description box. I don't use these usually during my normal screen, but this will help everybody see. We talked about the first 12 candles possibly painting either a peak formation, being a stop hunt back into a move, or going into consolidation within a range for the market to trade and make new highs and lows in Asia or London or whatever. But so in this particular example, the market in that first 12 candle window has come off of numbers and made a peak formation before reversing back inside of the 50 and then moving aggressively towards the previous highs of the sessions in the day before London and New York. And then hitting numbers, going sideways and reversing off the numbers with an engulfment down back to the double zeros before heading into the Europe Open, London Open, and giving us a pin bull candle engulfment at the open of the London session to move up almost 100 pips from top to bottom, but obviously 50 pips past the peak for a profit target. Now, in a situation like this, you may find it difficult to get filled obviously close to the numbers, but a candle that strength at that time with a tail and that much magnitude, again, position yourself with maybe adjusting your position size, taking a smaller position size, or waiting for another candle to print in there similar to these bull candles with smaller tails as your 1 bar stop, or just adjusting your position and using this larger candle as your stop. But the point we were talking about earlier was breaking things down into 12 candle increments. And if this first third of Asia, as we talked about, will either, in most cases, extend out to paint a new high or a new low before pulling back and consolidating, or else extending out further. In this case, it pulled back and went into consolidation prior to the Europe session opening. And then London retesting the high in between those 2 a.m. to 5 a.m. New York time, and then pulling back and consolidating again, going sideways into that next 3-hour block, heading into the New York Open. We saw a stop hunt on traders who were short, and then stop hunt on traders who were long, and then the U.S. markets opened to retest the highs and went sideways into the close of the session. So again, we talked about markets, false breaks and reversals. We talked about markets breaking out and continuing the move, and we talked about markets breaking out, pulling back, and going into a range-bound market. So these are the three things to consider. And again, using that 12 candle window, for example, if you were long somewhere in here and the market takes out the high and you're in that 3-hour window and it's ending, and that market pulls back at numbers and consolidates, you may want to reassess, assuming that that trade's going to continue, because again, the market tends to move in 3-hour blocks, whether it extends out even further or again in this case comes back into the range. Again, the next day we see a consolidation and a stop hunt back into the trade from the previous session. 2 numbers before reversing at the Asia Open and extending out in that first 3 hours, and then going into consolidation, and then Europe and London extending that move further before going into consolidation, and then the US session stop hunting and reversing, and then going back to the other side of the range before going back into consolidation. Again, if you break this down, you can see a third, and then this was extended out in the second third, the first third up, and false break reversal. These 12 candle windows can give us a lot of insight around the numbers, where we see our highs and lows being drawn, but also the numbers that we're trading around, and whether or not those ranges extend out further or if indeed they pull back and consolidate. Something to consider as you head into each session. In this particular case, you can see that the US session opened up inside of the range, making a new high, session high, before pulling back to retest the lows and then consolidating and giving us an engulfment for a 50 pip trade back up to the high. 12 candle blocks, just monitoring whether we're getting extended moves, whether the market's trading in a consolidation, if we're at highs or lows for the day, if that market pulls back, does it consolidate at numbers to retest, or does it consolidate going into the close and then possibly putting a peak formation on in the next day. Little things as you go through. Again, that first third gives us a new high, the market goes sideways and then retests the high, going into Europe, consolidates beneath the peak before reversing off of numbers, back down, retesting the lows, consolidating, stop hunting into the numbers for the short trades, going sideways into the next session. Just again, that most important thing is that at the opening of the equity times, that first 3-hour window will often be a high or low, possibly for the session and maybe even for the day. Something to remember as we head into each day if we are at highs or lows for the day. Those areas will often be points for the market to pull back into the range and consolidate, especially if they've already done a stop hunt or are trading into numbers, as in this case. So hopefully you got some value from that, traders. Just be conscientious of when you're in the trade, of a time decay factor if that trade is not moving, reassessing if your position may be in jeopardy, but also if you're in an extended move, holding on for that trade to play out possibly to the next set of numbers. And again, as we head into that next 3-hour block prior to the US market, or if you're in the Asian market into the Europe session, that you may be at a point where the trade could possibly start to reverse or stop hunting against you. Stay disciplined, traders. Stay focused. Probably going to have a lot more volatility again this week with everything happening in the world markets. Good luck with everything, and may the markets go with you.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.